Here is a summary of the ServiceNow Q1 2026 earnings call transcript, presented for easy reading aloud. Thank you for joining ServiceNow's first quarter 2026 earnings conference call. We have Bill McDermott, our Chairman and Chief Executive Officer, and Gina Mastantuono, our President and Chief Financial Officer, with us today. Financial highlights and performance. Revenue. ServiceNow delivered strong Q1 2026 results, exceeding guidance. Subscription revenue grew 19% year-over-year in constant currency, reaching $3.671 billion. This was above the high end of their guidance. Remaining performance obligations, RPO ended the quarter at approximately $27.7 billion, showing a robust 23.5% year-over-year growth in constant currency. Current RPO CRPO grew 21% year-over-year in constant currency, outperforming guidance by 100 basis points. Profitability. Non-GAAP operating margin was 32%, exceeding guidance by 50 basis points. Free cash flow margin stood at a strong 44%. Deal activity. The company saw significant deal momentum with 16 deals greater than $5 million in net new annual contract value, NAC, and 5 deals greater than $10 million. The number of customers spending over $1 million grew by over 130% year-over-year. Emerging products. Now Assist NAC continues to outperform expectations, on track to exceed their $1 billion target for 2026. Deals including 3 or more Now Assist products grew nearly 70% year-over-year. The newly rebranded EmployeeWorks business, formerly MoveWorks, saw a 5x year-over-year growth. Sales CRM NAC quintupled year-over-year. Management's forecasts and future outlook. Full year 2026 guidance. ServiceNow is raising its full-year subscription revenue guidance to between $15.735 billion and $15.775 billion, representing 20.5% to 21% year-over-year growth on a constant currency basis. This includes a 125 basis point contribution from the Armis acquisition. Q2 2026 guidance. For the second quarter, subscription revenues are expected to be between $3.815 billion and $3.820 billion, a 21% to 21.5% year-over-year growth in constant currency. CRPO growth is projected at 19.5% in constant currency. Profitability outlook. For the full year, they expect a subscription gross margin of 81.5%, and an operating margin of 31.5%, with a 75 basis point headwind from Armis. Free cash flow margin is projected at 35%, including a 200 basis point headwind from Armis. AI impact. Management is highly optimistic about the impact of AI, projecting their AI-related revenue to potentially reach $1.5 billion in 2026, exceeding their initial $1 billion target. Significant risk factors. Geopolitical uncertainty. The ongoing conflict in the Middle East caused a slight headwind to the guide, particularly impacting the timing of several large on-premise deals in the region. Integration of acquisitions. While viewed positively, the integration of recent acquisitions like Armis and Visa requires careful management, with some near-term margin impact expected as these businesses are brought fully into the ServiceNow platform. Pace of AI innovation. The rapid pace of AI development creates a dynamic market, and investors are keenly watching how ServiceNow will continue to lead and benefit from these advancements. Highlights. AI native platform. ServiceNow's deliberate strategy of building AI natively into every product, not as a sidecar solution, is a key differentiator, leveraging their extensive data and workflow context engine. Strong M&A integration. Acquisitions like MoveWorks are quickly integrated and showing significant early success, demonstrating effective execution. Broad customer demand. Demand remains broad-based across various workflows, industries, and customer segments, including strong growth in the U.S. public sector. Partner ecosystem expansion. Deep collaborations with leading AI providers like OpenAI and Google are enhancing the platform's capabilities and reach. Hybrid pricing model. The flexible hybrid pricing model, combining seed-based licenses with usage-based consumption, is resonating, with customers allowing for scalable AI adoption. Lowlights. On-premise deal pushouts. A small number of on-premise deals in the Middle East were delayed due to geopolitical events, impacting Q1 revenue recognition for those specific deals. However, management emphasized these are timing issues and do not represent a long-term concern. Most important statements from management. Bill McDermott, CEO, AI as a tailwind. There has never been a tailwind for ServiceNow like AI. Since Fred Luddy started the company, we've always focused our platform on the jobs our customers needed done. Context engine is key differentiator. The difference between ServiceNow AI and the foundation models can be boiled down to one word: context. He emphasized that their platform's 22 years of experience and trillions of transactions provide unparalleled context. AI Control Tower for business reinvention. This vision encapsulates their strategy, providing visibility, decision-making, and action across the entire enterprise, integrating AI, data, security, and governance on a single, open platform. M&A strategy. Acquisitions are focused on adding innovation and capabilities to the AI Control Tower, not just plugging revenue gaps. Long-term value proposition. In the long run, they are weighing machines. And I'll tell you, I'll get on that scale with that ServiceNow brand on my chest any day. He expressed strong confidence in the company's enduring value and competitive position. Gina Mastantuono, CFO, exceeding expectations. Q1 was another quarter of outstanding execution. The team delivered strong results, beating the high end of our guidance across all top-line and profitability metrics. Armis acquisition impact. I'm thrilled to announce the early close of our acquisition of Armis, which will significantly expand our TAM and accelerate our subscription revenue growth. She noted some near-term margin headwinds, but highlighted internal efficiencies mitigating these. Confidence and guidance. The confidence I get is from the incredible team that we have around the table, the incredible go-to-market execution machine, all of the innovation that Amit and the team have been driving, and just the environment that we see ourselves in. Focus on value creation. The company is committed to driving a strong balance of world-class growth, profitability, and shareholder value, with a strong outlook for 2027 and beyond. In summary, ServiceNow delivered a strong first quarter of 2026, demonstrating robust revenue growth, excellent profitability, and significant momentum in its AI-focused initiatives. The company raised its full-year guidance, showcasing confidence in its strategy, product innovation, and successful integration of recent acquisitions, positioning itself as a leader in the AI-driven enterprise reinvention.